Hello and welcome to Crypto Weeklies. In this video, we are going to analyze Fantom, conduct machine learning based price forecast, regression analysis, accumulation strategies, and estimated bull run target for FTM. None of the content is financial advice. Let's get started. Over the last 7 days, Fantom has rallied by about 45%. Over the last 24 hours, about 8.5%. Price is above $1. Market cap slightly under $3 billion. Volume at around $1 billion, and in terms of the total supply at around 3.17 billion, out of which 2.8 billion is in circulation. There is a news related to migration from Fantom getting migrated to Sonic, and on their website also, that is the Fantom Foundation's website, FTM migrating to Sonic and its token S, where the on the website they say that the tokens are exchangeable with the new S token at 1:1 ratio, and also there is going to be a continued support for the users currently holding FTM. And this is the new website. I haven't taken a look at it yet, but again, this is, I think, still in motion. Now that we covered the news related to Fantom, we'll briefly look at the Fantom USD valuation in terms of weekly candles, how they are looking, and also how they are doing with respect to their bull market support band, which is composite of 20-week simple moving average and 21-week exponential moving average right now, and the Fibonacci level. Right now the price above 95 cents represents a rally up to the 0.236 Fibonacci level. The next stop for the rally, if the rally were to continue, is $1.44 per the Fibonacci level. That would represent about 0.38 on the Fibonacci level. At the half of the move retraced from its previous all-time high at around $1.83, and over the last all-time high was of Fantom in 2020. End of 2021 was at around $3.50. If in this market cycle Fantom were to make, again, its tokenomics for the new token are to be decided, but again, if the market cap based fundamentals hold true, from here, 1.618 fib level for Fantom puts Fantom at around $6, at the 2.618 at around $9, and the 3.618 at around $12.5. And the potential, like the 4.236, which Fibonacci level, which is a market cycle related peaking scenario for most cryptos who make highs across multiple cycles. That 4.238 level for Fantom is at around $14.37. So this is all of the technical analysis that we have for the store, on the store for Fantom. Again, now we'll go to our website, cryptoweeklies.com. The link is on the bottom of your screen. All of the content available for free. You don't have to pay or sign up for anything, or content with some irritating ads. It's all ad free. We'll start with the machine learning based price forecast graph, and then slow return to regression and accumulation strategies. Again, this website contains information not just for Fantom, for most of the top 100 cryptos by market cap, as well as some of the crypto pairs on Bitcoin, ETH, as well as some of the ones out of the top 100 cryptos by market cap as well. So let's get started. Fantom on this weekly price action journey. This is average weekly price action of Fantom USD in white line, has been used to train the machine learning model using techniques such as ARIMA, LSTM, and XGBoost. And the following are the findings of the machine learning model. Again, these models are curated personally and have taken a lot of effort. So hope you find this information useful. If you did, please subscribe and also give this video a like. Per this model, the price action for Fantom, the directionality of the price action for Fantom is this pink line, which is the base case or the fair value of the per the model for Fantom and FTM, between $1.05 and $1.33. So again, a 33% gain in the fair value or directionality based forecast. The bull case for Fantom per the model is between $1.21 and about $3.36, and this is a 68th percentile bull case over here in this yellow line, which means this is a non-euphoria or one standard deviation bull case for Fantom and cryptos on their especially in the post halving year during the blow off top. They do the decent ones do a two standard deviation move, and that two standard deviation move is encapsulated by this orange line, which is the 95 percentile confidence level for the forecast between $1.38 and about $7.50 for Phantom. And this forecast extend only to the first half of 2025 till about 4th of May of 2025, because our machine learning models have do a lot better when they're forecasting only 6 months into the future. Again, no one can predict what could happen in the future, but again, the use of machine learning techniques to estimate what can be as expected bull case or expected bear case based on historical data is nonetheless very useful. In terms of the bear case pullback between 46 cents and 91 cents, this is again within one standard deviation. Again, this does not consider the ultimate panic related scenarios what they usually occur during the end of the post halving year. Again, we are not in that phase at this point in time. The per my own estimation and analysis, the likely scenarios for Phantom going into 2025 are this first, the 95 percentile bull case. Again, we can get rid of the bear case. Again, that does not mean that there won't be any pullback just for now. And the one standard deviation, this yellow line and the orange line. And if you want to analyze that in terms of tabular value and week by week tabular, what could be a theoretical bull case for each week, these are also available at the end of the chart in a tabular format. Again, the base case is this pink line, the bull case the yellow line at 68 percentile, and the orange line at around at 95 percentiles. Again, the way to interpret this, for example, is for the week ending on December 1st. Again, that is the current week. 95% chance that the price stays under $1.38. 99.7% chance that price stays under $1.58. Again, similar opposite of this is that 68% chance that price does not go below 91 cents. 95% chance that the price does not go fall below 79 cents. So this is the way to leverage machine learning to discover some of the expected values. And this is the second analysis is the regression analysis. These are the weekly candles for Fantom. On top of these weekly candles, this is the fair value polynomial regression function wrapped around trying to encapsulate both the bullish and the bearish phases of the market cycle and cut through them to establish a fair value, a non-linear fair value, which goes up during the bullish phases and goes down during the bearish phases, and to understand when the token is undervalued or overvalued, and with respect to how much overvalued, there are residuals applied on top of this function. Again, the orange line, the color scheme is the same. Orange line represents the two standard deviation ceiling or two standard deviation overvaluation from the fair value. You can see the last market cycle, the top was at 2 standard deviation residual applied to the fair value. Right now that 2 standard deviation, again quite confluent with the machine learning model, coming in at around $8.75. The 1 standard deviation ceiling for Fantom close to its all-time high at around $3.71, and the fair value at around $1.57. So that's about regression based valuation. On the other hand, the 1 standard deviation support, which held throughout the mostly throughout the bear market, is now coming in at around 67 cents. This is the green line, 1 standard deviation residual green line. And now that we have analyzed the regression based valuation for Fantom, we'll take a look at the 3 models, the accumulation models, and then have discussions about the estimated bull run target based on the composite or aggregations of these 3 models. The first is the simple moving average, how the price is doing with respect to the 20-week simple moving average. Based on that, these color codes are assigned and the risk levels are normalized between 0 and 1. The key idea with this model is to identify when to not DCA, that is, or DCA out of the market based on how overheated the price has been. So if the hypothesis is that DCA only makes sense when, or avoiding DCA whenever the risk is higher than 30%, let's say, you are essentially avoiding all the grayed out regions where the price has price risk is higher than 30%. The opposite utility of this model is identifying, let's say the hypothesis is whenever the risk exceeds 70%, selling at those or DCing out of those risk levels. Again, you can play around at around, let's say, risk at higher than 50%. These represent some of the toppy uh, or the overvalued phases for of the market cycle. These kind of things are available based on this model. Again, this model can be used to estimate what the price can do in future based on the current risk levels. Again, the price at $1 represents about 20% risk, and the moderate target per this risk reward based forecast is at around 60% risk represents price action at around $1.94 till about $2.40. That's the moderate target. The higher end of the target between $2.50 and about $2.68 for Fantom. Right now the risk level for Fantom per the model is at around 41%, and again represents a risk of between close to 0.3 and 0.4. And now the second model that we have is the dollar cost average model. This is a similar model based on, if you remember, the weekly polynomial regression function based model. Instead of applying at a week level, this gets applied at a daily level, and based on the time adjusted as well as the proportional difference between the price and the fair value regression line. Again, this fair value can again be estimated into the future. We haven't worked that much on the future regression line, but currently the same valuation at around $1.57 is the fair value, and based on this relationship between the price and the fair value, the risk levels are drawn, again normalized between 0 and 1, and help us estimate, let's say, if the hypothesis is, again, to identify top. This model has done a better job of identifying the top than the previous model. And also again, you can see over here the hypothesis where more than 60% risk is again estimated during the final leg of the 2021 market cycle. Again, DCing out of that market when the risk levels are higher than 60% was a decent prediction by the model. And in the bear market, you can see this model did help us identify when it was the best time to dollar cost average between when the risk was between 0 and 1 based on this regression model. And again, this is not some retroactively drawn model where its utility has already collapsed or lapsed. This is a live model. Again, over here this model currently says that the risk is less than 10% over here. You can see over today, 26th of November, risk represented at around 8%. And if we take this model and use this model to estimate what the price could do, right now representing about 10% risk, the moderate target again for Fantom per this model is between $3.63 and till about $5, and the higher end of the target between $5.40 and about $6.50 for Fantom for this market cycle per this model. And again, the one way to cut or interpret this is, again, what is the price, again, two standard deviation residual applied to this regression function, how the tops could look like. Again, last time the price when came close to the dotted red line, there was a huge sell-off back in early March of 2024. Back then the peak regression valuation estimated by the model was at around $1.09. Now that value is at around $5.50. So this is again one way to interpret what the price could do in future. Last but not the least is the time weighted average price model. How much time has Fantom spent at some of the key price level. This model helps again estimate what is a great time or great zone to dollar cost average whenever the price is below this blue line that represents an undervaluation with respect to the time weighted average price. Also opposite of that, whenever the price has too far gone from the blue line, that is usually when the tops. Again, this model does not do a great job of identifying the actual top, but a range for both the top and the bottom end. This is red color codes as well as when it's this purple color codes. The purple or plum color represents the perfect time to DCA per this model, or perfect range to DCA per this model. This time weighted average price for Fantom was is currently at around 41 cents, and not too long ago, that is during the panic of August of 2024, the price was trading lower than the time weighted average price. Right now, that this risk represented by the model, at now let's check time weighted average price risk for Fantom coming in at around 60%. And now that we have analyzed all of the accumulation strategies based valuation, now we can spend some time on estimated bull case target per, which is a composite of the three models: the DCA model, which is the regression based model, time weighted average price, and DSMA model. The weighted risk per these three models is at around 30%, which represents, again, per the expected value, the bull run peak estimated by this model, which is a conservative approach to forecast what the price could do just based on the expected value, is at around $3.18. And per the risk reward right now, this represents a reward of about 3x from the current price of around $1. So hope you enjoyed the content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.